Okay, good morning, everyone. It is Tuesday, July 15th. It is 8:35 a.m. Eastern Time. This is Tom Alexander. This is the live trade room recording. And we had the furious rally last night regarding China, Nvidia, all the usual exogenous suspects. We have a noisy spike here due to CPI. This level you see on my screen, this right here, this is an important immediate level. If they retrace this, if they get through here, it opens up this elevator shaft that occurred last night on this NVIDIA thing. Now, this is so far an interesting reaction to the CPI. It's not like the thing has run off and left the overnight in the dust. Of course, you know, it would be difficult to do that because of the reaction to the NVIDIA stuff. So, it's just business as usual. The market is remarkably bid. The market is driven by FOMO, and you have the NDX, SPX trading and the futures at new all-time highs. And if we open anywhere near where we're trading now, we will be opening in the cash market at new all-time highs. Uh, So, we'll see what happens when the cash market opens. But, I'm in a situation where I'm not going to chase this thing higher. It is really, really, really getting compressed to the upside. And, we're in a bull market. I'm not looking for some sort of grand Armageddon top, but I am looking for at least a short-term top. Now, I don't want to get run over by that because this thing can go up 2 or 3 more% before it drops 2 or 3%. So just be aware of that. You can see on my screen, we're making higher highs and higher lows. If we were to take out 63.25, that would be an early initial signal that a short-term top could be in place. That's the best way I can put it. Okay, guys, it's 9:10 a.m. Eastern time, and we're going to have a significant gap up. We are holding near the highs of the day. We had the Nvidia spike in Globex, followed by the CPI spike in Globex, and here we come into the cash open. Now, this could be a pretty big gap up. Could we just gap and run from here? Uh, we all know the answer to that. Absolutely. But this, I can't chase it. The NQ is on its high. It's just the most FOMO market I can recall in quite a while. Uh, I'm going to sort of sit back. I want to see the opening. I want to see what happens in this first half hour. The trend is up. It's very clear. We're making higher highs and higher lows. This 63.25 level, that was a minor low in Globex prior to the CPI spike, uh, seems to be a level that was defended in Globex. Below that level, you're sort of in an elevator shaft from the overnight NVIDIA ramp. So it's every exogenous event is an excuse to screen this thing higher at the moment. Okay, guys, it's 9:42, which is way too early to draw any conclusions. This is a pretty big retracement off of the spike highs. There's two of them, the NVIDIA spike high and then the CPI spike high. There's probably something at 10 o'clock that will cause a spike high, something at 2 that will cause a spike high. It's just, it's never ending. Uh, again, I don't know. Let me look at something here. Breadth is a whopping plus 100. That's got to change. Uh, that's another reason not to be chasing this market at the moment. Now, breadth can turn around. They can turn this thing, certainly turn breadth around. I mean, I've seen the market go up on negative breadth all day long. I don't recall when, but it's been in the room over the past, in the distant past. So you can't rely on that as a rote signal. But I tell you, with breadth where it is now, it's negative, it's rolling over. This doesn't confirm the ebullience of NVIDIA and the CPI. So let me look at VIX, see what it's done. It's probably come in, who knows? VIX so far is below yesterday's high, but it's still above the high for the previous 4 or 5 days. But it's not as high as yesterday, at least yet. Now, if this thing continues lower, it will. Okay, it's 9:47. I have to run out for a bit. This is a trip I have to make, an appointment I have to keep. Hopefully I'll be back within 45 minutes. But again, this market is, at least the internals at the moment, emphasis at the moment, are not confirming this incredible ramp. As a matter of fact, if breadth does not turn back up, this is a very significant sell signal. Now it's 9:47. It's a long day. Uh, it's not going to go down at the rate of change that it's going down at present. So, but maybe buy an ODTE option that expires today or something. I'll be back in a bit. Okay, I'm back. It's 10:34, and we have traded down into this gap and maybe closed the gap. Not quite, but close. So let's see if we bounce from here. Let's take a look at this is a key reference area. This is an important area. So a bounce would not be a shock. Um, Hold on a second here. I gotta check something. Let's see. Um, Let me see something. Bear with me, guys. I'm checking some orders I have out here in trading land. Um, Bear with me. I'll get back to you just a second. I got to do a couple of things here. Okay, let's look at a couple of things here. Getting really interesting from an intermediate term perspective here. Really interesting. Okay, this is the SPX cash chart. You can see now this is a level I had highlighted probably from last night. This is an important level. You know, we had this huge spike because of NVIDIA, because of the CPI, and we're having this big retracement. Now, the question you always have on market gaps like this, is it going to gap and run? We've seen the gap and run thing. Now, this rally is not a young rally. This rally has been going on and up relentlessly since the end of April. It has been since the middle of May or, no, or June. We'll look at that in just a second. Since we've had even a 2% retracement. So you're way overdue for that. This has the potential to be that, the beginning of that. Uh, let's look at, all right, here you go. Here, let's just look. So let's see, this was the latest and greatest crash, 1.35% crash. This was a 1.9% crash. So it's been since May 19th, a little less than 2 months ago, that we had a 2% plus retracement. This was 3.5%, or not quite. And there's a giant gap here. There's a giant gap here. So this market has just been on steroids to the upside. It's been panic, FOMO buying all the way up. And a lot of times in situations like this, you'll put in tops on days like this. Now, again, this is a reality check. I've said this many times in the past. My biggest losses have come when I'm most sure about things. So you never really want to over leverage. But I'm short and I'm going to stay short, and I will probably get shorter if we continue to see these signals that a top of some relative significance is in place. Let's go through the NDX, of course, giant gap. Now, my NDX on this platform is delayed because I have real time elsewhere. The Dow, wow, this is a dramatic divergence because the Dow barely was able to take out yesterday's session high and is now cratering. Wow. Even more evidence. The New York Composite, which is the broadest index, couldn't take out its high. Equal weight, same story. The Russell, of course, same story. Now, it did take out yesterday's high, but it opened and has been cratering since. Uh, this is the New York Composite. Let's just see. Let's go down in time frame to daily. Yeah, it's following the NDX. So the bottom line here is that there are signs of a potentially the most significant top that we've seen since May 19th. Now, how significant was that top? It was 3% decline. That's nothing. 3% from today's Brent high. Would take us down into here. And that would be interesting because this would be a level to keep an eye on in here. So that's where we are. We'll see how the day unfolds, but I would be favoring short trades. Okay, guys, it is 11:03, and we've pretty much been straight down during the cash session. We're not going to go down at the same rate of change. So, but you've got to be favoring short trades as long as we have this clear pattern of lower lows and lower highs in effect. So what you want to be looking for ideally is a retracement back into or close to at least the faster moving average over here on the futures chart. This is sort of a maybe a short-term important pivot. We'll see how important it is. We'll see if it gets back up there. But you want to be favoring short trades. Now, this is super compressed right now. So a bungee jump in here would not be a big surprise. But I would err on the side of selling rallies as long as this pattern that we see that is very clear is in effect. This is your classic trend day type of pattern. I have outlined all the reasons from a larger degree time frame perspective to be considering the idea that we could be put against some sort of top of relative significance. Okay, 1137, and we came up to the this area in here of the moving averages. Now above here, then maybe you're looking up here. Uh, I still want to favor the short side of this market, but just be aware that this thing got really compressed. Now, all sorts of paths of development are possible here. Uh, this could be close to the low of the day. We could go down and make a lower low and then stay in this range. We could establish a higher level above here. You don't want to see this market start to accelerate above this faster moving average. That's that was one of these days that could turn into one of these days where they rip your face off back to the upside. Uh, so this is sort of my general line in the sand for my currently strong assumption to favor short trades. Now, that said, if we go to new lows here, you have to be careful. Selling new lows in a trend like this, for me, hardly ever works because what happens is you get down here, you sell it, it goes like this, and then it rips higher back up into that moving average. And then it works its way lower. You have this thing, it goes lower. You get down here, you sell it again, and it rips your face off again. So selling new lows when the market is this compressed is typically not something I like to do. I would rather sell the rallies off of the lower lows. Now, if you want to be a super intrepid trader, if it makes a lower low like it did here, you can have a resting buy stop to catch what for me is a scalp. But that scalp in a market like this can be 15, 20 handles. I'm not suggesting you do that. It's something I will do on occasion. It is a viable option on days like this. Okay, had a furious run at the lows there. I'm watching the SPX and NDX as I usually do, and suggest you do too, on 5-minute charts, and the SPX got way ahead of the NDX to the downside there. That made this current decline a little bit suspect. Now, that doesn't mean uh, things won't turn around with the NDX and drag this thing lower, but it's a heads up. Okay, this is the chart I was telling you about that I was watching. This is the NDX over here on the left. This is the SPX on the right. And you can see how deeply we traded back towards the lows in the SPX and not the NDX. So that's sort of a heads up because obviously, for the obvious reasons, they trade very closely together. So at extremes, highs and lows, sometimes there are divergences that can give you a heads up. It can help you with entries. It can help you with managing trades, etc. Okay, it's 12:51 p.m. Eastern time, and we have sort of a double bottom that formed here. I was hoping we'd take this out. I was going to try that trade where you trail a really tight buy stop and then sort of scalp the market back up into this moving average. That could still occur, but it hadn't yet. I'm leery about either side of this at the moment because it's so compressed in this time frame. This is going to be an important area to the upside now, clearly for obvious reasons. Uh, what else? Breadth is negative 1500, which is negative, but it's not any sort of panic type of extreme. VIX is still at the moment above yesterday's high. Um, so that's where we are. There will be opportunities. It's only 1 o'clock, not even 1 o'clock. So be patient. At the moment, it looks like this thing wants to go higher. So for you intrepid traders, if you want to try longs here, and then if you get the wide range bar into that 19 period EMA, the red EMA, you bring your stop to break even and see if it works its way up into 63.14. I'm not going to take that trade, but that if you wanted to go long, that's the trade. Uh, I'm sort of waiting to see if it's going to take this out and see if I can get a buy set up that gives me the bungee jump. Okay, this doesn't qualify. I'm not trailing a stop here. It's too much. Now, if they take the low of this far out, then I might try. But this has some conviction behind it, and the NDX is about to trade to a new low, so it could be that it's gonna coincide with the ND now, and also something about the NDX. I don't know if you noticed before when I showed that SPX NDX side by side chart I keep. Well, NDX hadn't closed its gap. And this is why you don't just plunge in. Now, I missed the down move, but I didn't get run over by saying, okay, I'm going to buy it 3 ticks below this low and ride it back up. Well, that wouldn't have worked, right? So that's why I used the buy stop thing. Now, this thing could, it could turn around and scream higher from here, but that's not the setup I was looking for. It doesn't mean this won't be some sort of short-term climactic low. The NDX just took out its cash session low, by the way. So, okay, this is what I was looking for. I'm long down. I have a stop like 3 ticks below the low. If this is going to work, you know, this has got to be the low or maybe one little tick. But this is not a trade you give a lot of room. It's a very specific trade that you put very specific parameters on. And I'd like to see it get up here, but if we take out this bar high, I'm going to break even. Okay, now again, I don't know if this is going to work, but it's certainly the setup I wanted, and I executed it as well as it can be executed. So we'll just see. Something going in the favor of the trade working is also this. Uh, what is it? Where are you? Here we go. So you had the SPX trade to a lower low. The NDX did not. That's something else that's you really like to see. Now you can't, it's hard to wait. I mean, I'm in this before the divergence is clear, but there was a potential divergence when I got in. So that's what I wanted to see. But this is, if this works, actually, regardless of whether or not it works, it was the classic setup for this type of trade. Okay, I've taken partial profits. I'm just stop at break even, and I'll see. I'll just ride it until it reverses. So this is a counter trend trade. So you can't be sitting here thinking, hoping it's going to trade back to the highs. If it starts ramping higher, there'll be opportunities to buy it along the way. This was clearly a counter trend trade, but from my experience, it's a high probability, good reward to risk trade setup. Okay, this is where, by the way, it's 138. This is where I'll start to trail a really tight stop because we're straight up. The trend is down. This is the counter trend trade. We're above this moving average. We're approaching the slower moving average. So somewhere in here, this thing is going to air pocket, eight handles to the downside in a nanosecond. So, okay, guys, this thing is running off. I'm out. I'm flat, and this is great, super. Uh, Now, this is going to be an important area. It's an inflection point from an auction market perspective. It's that previous pivot high, but it's also probably close to a 50% retracement, and a lot of people sell or buy into 50% retracements. Let me just see if I can get a fib thing going here. I'm not a fib guy. You know that, right? I've been there, done that. I'm an expert in fib and a lot of other things that are worthless, but I do, I am aware that people really use that 50% retracement. Let's see. See if I can. Here we go. Well, I want, can't get it to go down. Hold on. Houston, we're having technical difficulties. Okay, there you go. All right, so this is in the neighborhood of that 50% retracement that some traders will be jumping all over to sell just because. So that there's a confluence of actual auction market structure here, and then the magic 50% retracement. Okay, it's 249, and we came up into this lower moving average, formed a balance area. Now, if we get above this to the upper extreme of this balance area. They were probably going to ramp up into here. Now we may not get above that area either. So there's that. Okay. Uh, that clears that up. Now you do not want to see this bar high exceeded. But bottom line, uh, we had balance area that formed, broke lower, balance, broke lower. A lot of noise here. I'm not sure if this was some sort of no, news event, but if you're in this, just do not let it go above this bar high. Okay, it's 3 p.m. Eastern time. This is a little bit different. We have the NDX now leading the way. It actually has the cash market double bottom. The SPX hasn't quite taken out its earlier low. Breadth is just crawling. It has not been able to get off the mat all day long. It's negative 14, sorry, 1545, 1548, but it's been in a super narrow range. It can go a lot lower, as we all know. Below this level here, let me just show you what I'm looking at here so you know. Below today's low, you're in the abyss that extends all the way down to about 62.40. It's right here. Yesterday's low and Friday's low. This is a really important area. So today is a interesting day, potentially signaling a top of some relative significance is in effect. We shall see. Okay, we're coming into the stretch run here. It is 3:35. We have 25 minutes left. We're testing these lows again. Will they crater it or will they tease and bungee jump? It's a tough one. Great reward to risk on the bungee jump. Again, if you're going to do that, trail a buy stop so that you have defined risk. Don't just buy it 2 ticks below this low because we saw what happened up here uh, or here. So, but it looks like this thing wants to jerk down to a new low. We'll see. Okay, I want to make note here. The NDX has already gone to a lower low. The SPX has not. So there's that divergence. So, if you want to be aggressive, trail a buy stop here because you do have that divergence there. Now, the divergences can be erased too. That's why you trail a buy stop and let the market put you into the trade so you have a defined level of risk. Here you go. So you can see the NDX went to a lower low here. The SPX so far has not. So will it? It could. But this setup is really sort of in progress now. Uh, it could be that the NDX is the one that is diverging this time. So, you know, you could trail a buy stop right here. And then your stop is here. I mean, that's as small a risk as you could get for the potential reward. Okay, 8 minutes left. And we're testing the lows again. Are we going to hit it or not? NDX is stubbornly staying up, at least for the moment. I'm not sure what that means. Maybe nothing, but it is. So we'll see if people are panicking to get short here into close and they jerk them back up 20 handles or something. Okay, I didn't have the audio on before. I didn't have the recording going, so I'm going to repeat everything I just said. This is the pre-market for Wednesday, July 15th. And if you skip through the live trade room recording, welcome. This is the update that we do every night for the members. I'm going to do a special report tonight, and this will be it. What a day, huh? I mean, the markets, as I'm speaking, are just continuing to crater here in past the cash close. So let's take a look at things here. I mean, the cash market closed right on its bottom tick. That's a little unusual. Let's look. A lot of stuff to look at here. Let's start with, well, I landed on Brett, this screen. Okay, so this is our 30-minute SPX cash Brett chart. Brett was negative all day long, crawled along this area, and is going to go out at negative, what is that? Negative 1653. Now, Brett can get a lot more negative, and if this is going to be a correction of some relative significance, more significant than any that we've seen, we could get a negative 2,000 Brett reading out of this. I will also point out that, and you always have to put this in context. And you guys that are members have heard me say this a million times. I'm going to say it for the entire crowd here. This is typically in a bull trend, you're looking for a low here soon. Now, if we have flipped and we're going to go into a corrective phase and some retracement, more retracement than any that we've seen since May 19th, which I've been showing in the reports, showing the weekend updates, then breadth may not come up for air for a few days, and we may have a negative 2,000 breadth reading in that process. It's too early to know, but it's sort of a contextual situation. If we have flipped now into a more corrective mode, the fact that we are reaching a downside extreme in breadth is not nearly as meaningful as when we're kicking off on a bull trend. So there's that. Let's look at, okay, the indices. I'm going to start with the SPX. All right, the SPX, this is about as dramatic a reversal as you're going to see because we had the NVIDIA ebullience overnight, followed by the CPI ebullience at the opening, and that got retraced rapidly when the cash market opened. Now you can see here on my screen, we have come down to the next critical inflection point, which happens to be Monday and Friday's low. Below Monday and Friday's low, you're in an elevator shaft down to about 6,200. And from today's print high, let's just adjust this. That would be a whopping 1.62% lower, which is no big deal. We have not had a greater than well, not even a 2% correction since the top on May 19th. That turned into a 3.37% correction. The retracements off the April low have been far and few between and have been extraordinarily short-lived and increasingly shallow to this point. So that's the SPX. Let's look at the NDX. I think I just showed the NDX, no, or did I? No, I didn't. So the NDX still has this gap. But you can see here, let's see. So today we're down not even 1%. That's nothing. It just feels like a lot because of all the Globex shenanigans. Down 1.64%. So there's a lot of room to the downside in terms of what we have seen lately and what is typical. That's what the New York Composite did today. New York Composite did not participate in the early bungee jump, and the Dow did not either. So those were divergences at that high. Neither did the equal weight S&P. Let's see, the Russell, of course, I'm sure didn't know. Okay, let's take a look at some technical stuff. All right, VIX. VIX finally, for a lot of the day, it was holding above yesterday's high. Yesterday's high was odd because the market was up, and yesterday's high was a big spike in VIX on a percentage basis. And so VIX was sort of warning that this might be coming very soon. And here it is. Now, VIX is certainly not elevated. VIX can go a whole lot higher. And it has recently. It can go a whole lot higher than this, but it can certainly get a whole lot higher than it is right now. And it will if we're going to have some sort of meaningful decline. Now, if we were to retrace most of the rally that began at June 23rd, which is this low right here, then if we to get to this gap, we'd go down about not quite, well, about 4%, really, right in the middle. That put us in the middle of the gap. It's not a prediction, it's an observation. If we take out these lows yesterday, it looks like you got to believe we're going straight to 6,200 a little bit in there within 10, 12 handles or something. So the market is closing today decidedly bearish, giving bearish signals. Now, you always want to know what would invalidate this bearish working assumption. Well, if everything rips tomorrow and closes above today's session high, it's back to unicorns and rainbows. Okay, let's look at breadth. Now, I've been talking about this and showing this in the weekend reports and the daily reports for members. The 10-day started to roll over this week. It started to roll over Friday big time, and we had set some divergences up here. And the caveat is that this is perfect hindsight, how wonderful it works, but it doesn't always work this way. It is much more effective at identifying lows than it is identifying highs. However, when we got up here, it was a heads up. It was a heads up that the trend was not going to continue at the rate of change that we had been seeing since the end of April, and that is certainly the case. Now, even if it turns around from here, that's certainly the case. But there's a lot of room to the downside for both the 10-day moving average of NYSE advancing issues and the 5-day to trade lower. The histogram is breadth. And again, negative, we're going out negative 1,600. I couldn't tell if those things 16 or 18. You can see how few and far between negative 2,000 breadth days have been. We've been in a bull market. That's typical in a bull market. If we are in some sort of a protracted correction or a bear trend, even if it's intermediate term, we're likely to see more negative 2,000 breadth readings. So guys, I will, for those of you that are members, I will have the room open bright and early. You guys have a great evening. The rest of you, I hope you've enjoyed this. I will see you soon.